Hello traders, Gary Wagner for Trending Markets. About a quarter after 11 in Honolulu, a quarter after 4 in New York, meaning the markets have just closed. And I will tell you that I am surprised at the close that I'm looking at as I recorded the gold forecast. Of course, in the last, call it 20 minutes of trading, we saw this market drop from about 2041 to below our stop, which was sitting at 2031. Market's currently at 2026.25, off about 37.5 points in the S&P. In terms of the Dow Jones Industrial Average, you can see the correlation. It was trading off about 160 points as I started to record for the gold forecast, closing down 253 points lower on the day. Tremendous amount of sell orders in the market on close, and they were hit hard. You can see this Dow closing on the low below 17,500 at 17,495. So traders, to give you an idea of how fast this market came down, let's go back to our S&P, and I want to pull up a chart. This chart is a 3-minute chart, So you can see this being 11 o'clock right here. Let me get my pointer up, but 11 o'clock, and of course 11 o'clock corresponds in New York to the close. Of course, the Globex is where the S&Ps are traded, so they do trade after the market closes. Here's 11 o'clock right here, but you can see in 1, 2, 3, 4, 5 times 3. So in a 15-minute period of time, right in here, we saw this market really fall from, what did I say, about 2040 down to these lows currently at 2027.25. Now, obviously, if I had any sense or feel that this market would break in this way, I would have raised our stops. But as I was going into my recording period for the gold forecast, of course, market was still trading around 50, between 40 and 50, which in essence was our entry price. We got in, of course, at 44. Market closed at 64. So I didn't really see the potential for the kind of sell-off that we saw. We certainly got that. We got in at 44. We got out at 31. The differential is the amount that we lost. We'll post that on our website in terms of actual points and drawdown. I apologize for this, but I will tell you that I was expecting a Christmas rally, and now that comes into a real contention with the way that the market sold off. Now, we're still up on the week, but we are well off of the lows. One of the culprits, obviously, has got to be crude oil. You can see that on this daily chart, falling to new lows and now trading below $35 a barrel at $34.72. So it was off about 80 cents per barrel on the day, down about 2.25%. Tremendous move to the downside in oil. So traders, according to Bloomberg, as well as other analysts, the sell-off that was precipitated in the market today was over global concerns, was over the fact that the dollar was so strong that that would hinder some of the global outputs for the multinational companies, and also the fact that oil was under so much pressure. That really hammered, of course, the oil stocks themselves. Commodities as a whole were down. We profited from that with our gold trade, but certainly not with our Standard & Poor's 500. So traders, considering the activity that we saw as this market closed down, and considering the fact that we are trending markets, meaning we look for opportunities to trade, the S&P certainly did not pan out, and that brings into question whether or not we will see some sort of a Christmas or Santa Claus rally. The one thing that I do believe that we will see as a extended trend in the marketplace is going to be the dollar. We'll look at that as our next trade, because I think we're going to see the dollar move higher, and I think we're going to see it move past 100. We'll have to see what happens to the equities markets overall over the next couple of days, but it's quite interesting that yesterday the move to the upside, that relief rally that we were anticipating, which actually unfolded in the way we anticipated, unraveled much, much quicker than I thought it would, and I believe took many analysts by surprise. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up in trending markets. Bye-bye.